The troll himself is at it again, Elon Musk. We're going to analyze my Tesla position, all the news taking it into all-time highs, along with the fun trolly comments. So let's jump right into this. Alright, ladies and gentlemen, the trolling continues, and finally, for the first time this entire year, my position in Tesla looks like it's going to be heading into the green, and yes, that's right, I bought at all-time highs at $345 earlier in this year, where I watched my shares tumble all the way below $200, but I believe in this company. I held strong. I wish I bought more, and I'm going to tell you at the end of the video what I plan on doing with my position, but let's get into the most exciting news going on, which I'm sure you've heard. Tesla flaunts first China-built cars that are finally going to be coming onto the market after building a massive gigafactory that's probably like a Guinness World Records for building factories at this kind of a rate, but it's going to be fun to see how this starts affecting their books. Be patient, be prepared, guys. November 21st is the LA near SpaceX rocket factory. Will they be releasing that truck, which we're all looking so forward to, because I mean, this will be the next big competitor in the big moat for Tesla as it continues to dominate the electric car industry. But the thing that I found most exciting this week was the mocking of the short sellers, because he released a tweet based on this company that was trying to short them. It was a firm, and I got a nice little email that summarizes quite wonderfully. It says, Mr. Unicorn and Elon Musk. David Enhorn, a hedge fund manager, short Tesla, criticized Tesla's operations in his quarterly letter to investors. So naturally, Elon took to Twitter with an open letter that began, Dear Mr. Unicorn, fabulous name, by the way. If that doesn't get you excited to read the full exchange, Elon closes with, finally, please allow us to send you a small gift of short shorts to help you through this difficult time. Not to be outdone, Einhorn responded with a note of his own, albeit a bit less colorful. I am glad that you read our October letter. You say we made numerous false allegations against Tesla. Can you be more specific? Tesla is trading flat on the day. Here was our response from Stock Twits. They give this little meme where, where everyone's like, whoa! And then they threw this little thing at the bottom where it says, Trucks of Lordstown. GM sold their factory in Lordstown, Ohio to the electric vehicle startup Lordstown Motors. Lordstown Motors is a new company that was actually set to buy Lordstown plant by the founder and former CEO of Workhorse, a struggling EV startup, because God knows nobody is able to compete with Tesla on the level that these guys are performing when it comes to the technology inside of their cars. So back to my personal position in Tesla. What am I doing? I remember a lot of you were battering the heck out of me for owning Tesla, especially when I was buying it at all-time highs. I still severely believe in the company, and honestly, in this price range, it doesn't matter. I honestly think whether it trades between 400 or 200 doesn't make a difference, because I could see this company 5 or 10 years from now, like the rest of us, being worth somewhere well over a couple $1,000 a share. So what I do plan on doing before this year ends, as I've mentioned, I have been trying to properly leverage my entire portfolio. If you've been sticking around this channel, you would have noticed that I sold Starbucks, MMM, and J&J, and you're probably wondering to yourself, why did I do that considering I sold them at a loss? Well, the problem is with my managed account where I actually hold my Tesla position, this is an account that is taxable, and I'm going to be taxed on this $18,000 left in this portfolio. If I don't figure out what I'm doing with that by the end of next month, because then we're going to go into next year and it's too late, I'll have to get screwed and the government will take $4,000 or $6,000. So I moved the money from those positions into my RSP, and then I transferred it all over to US dollars, and I dumped it all into J&J. Now, why did I do that? Well, I only had a couple $1,000 worth of Starbucks in Canadian dollars along with MMM and J&J. Mind you, I still haven't utilized the cash from MMM because that sits in my Royal Bank account. But more importantly, guys, I want to see my positions in a place that makes me happy. And in the short term, I want them to be scaled. So many of you would have realized over the last, few months, I've been leveraging around my tax-free savings account to get everything equally weighted, so I don't have to look at them anymore. I want these positions to make me happy, and they don't make me happy when they're too small of scale. I like my positions to be somewhere between 5 and 10,000 Canadian, because that way, if they actually decently perform, it can take me somewhere. Now, I was down on my Starbucks. I sold it at a $300 loss, but in the perspective of my portfolio, it doesn't make a difference. The dividends don't make a difference, and I can't scale it fast enough over the next year to get it to where I want to be. So I'd rather focus on about a dozen positions, get them to the scale where I want them, and then move on. And Tesla is one of those positions. So what I would like to do is continue buying just a few more shares. I'd like to own at least 10 shares of Tesla, which is my goal by the end of this year. Now, obviously, I wish I was buying it in the 170s. That opportunity I missed because, again, I was too busy doing other things. But don't worry, like I said, I am happy paying anywhere between $200 and $400 for this stock. So I'm hoping it doesn't continue to rally. And in the next month, I will be buying my last 3 shares. And in the meantime, I'm just going to continue scaling J&J. I am going to be selling off BTI and putting all of this money into basically J&J along with my VFV holding, just to get them to scale, because I already hold way too much of my tobacco industry. Because of my tax-free savings account, I hold a very big chunk of MO and BTI already. And what I'm going to do, because you can contribute $6,000 a year, is I'm going to pay the tax on my MO position. I'm going to move it over into my TFSA account, in which I will be re-leveraging out BTI and MO, and probably add a little bit more to those guys as well, and then probably a little bit more to Ryokan, and I'll be pretty happy with where my TFSA sits. My TFSA will be sitting. And then finally, I'll leave my Tesla shares in here, and I'll pay the tax on this. I don't want to put this into a registered account, because essentially if Tesla ever takes off, I would rather just pay the capital gain tax and have access to the capital than the capital gains I'm going to get in my RRSP, because I can't touch this money without getting penalties. So I'm just playing this game, and I'd love to know what you think in the comments section below. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.